Hi, Craig, Dimitri, Joe. Added, well, so for those of you that don't know, I imagine most of you have been with us for a while, but I was on vacation for about a week not too long ago. I just got back Friday, and I went to Ormond Beach, Florida. It was basically, it rained most of the time, I worked most of the time, and then came home sick, had to load up a U-Haul trailer to bring back to Louisiana for my mother. A bunch of stuff she had down there in storage, and had a blowout on the trailer, or no, sorry, on my truck. Had to get U-Haul, AAA. Had to get AAA 45 minutes from my house, and what should have been about a 9-hour drive turned into about 17 hours. 17-hour ordeal. And needless to say, when I got up after all of that, I was sick as a dog, and I've been terribly sick ever since. So, yeah, I guess I'm never going to take a vacation again. Hey, Vito. So at any rate, probably have maybe a few new people joining us. What I do, my name is Daniel Rowe, and we run a live trading room 5 days a week, every morning. And name of the company is Trade the Plan at tradetheplan.com. And we use market geometry for finding the areas that we want to trade across multiple time frames, together with some advanced volume analysis. What we have is relative volume, and I'll show you some of that here in a little bit. But every Friday, what we do is a weekly recap to go maybe discuss a little bit, a few of the setups over the week. And typically I'll go over my live trading, basically my track record, just to, kind of keep me honest and show you guys how my live trading is going. But really, in the past couple of weeks, I haven't taken that many trades, but yet I've actually grown the account. So I took a couple of trades over vacation. One was Crude, which would have netted me a pretty good deal if I would have gotten out at my maximum favorable excursion, but I ended up giving quite a bit of that back. But I did do very well in the Nasdaq. What was that, yesterday? So we'll cover a little bit of that, but mostly what we're doing Friday afternoons is going over the market structure, Elliott wave to some extent, to give us an idea as to what might possibly be unfolding, but more discussing the major areas in the market geometry and kind of where we are in the trend and what's the next major support resistance. And we're doing that over 4 different markets. So crude oil, the 6E, which is the Euro currency futures, Nasdaq, and gold. So I don't want to start with Nasdaq. Let's start with crude or something. All right, so I'm going to start with a weekly chart and then go all the way down to an hourly chart. So this is the weekly chart of crude oil. And this is the second time that we've been at this area of support. All right, we turned up pretty hard last time, but right back into this major trend line from high to high. So what I think is unfolding is a C wave down, which I don't think is over yet. It might be, but I really don't believe that this is the final low in crude, which was at 26. Just compared to, how fast and far we came down in 2008 and 9, the major push back up to correct that, and then coming down in a perfect set of 5 waves from this high. We would expect a 4th wave high and then a final 5th wave typically. So As far as the wave that we're in now, it, I think, is still a fourth wave. I know I have this in cyan. Typically, my main count would be in black, and then the alternate count would be in cyan. But I've been going back and forth on this, but the way that it's looking, if we don't take out this low, and this will look better when we go down to the 240-minute chart, but if we don't take out that low right there, if we stay above it and we start pushing back up, I would expect this trend line to break and to make it back up to the top of this channel, which you see is over 1,300 ticks away. And that might take, a pretty good while, several weeks at least. So I'm just going to say that until we take out this low, this is what I'm expecting. The next major push to the upside up into here. Now, this is the non-back adjusted contract. So this is the continuous contract. This is showing you the truly traded prices. The high of 147. I remember that being 148. And then the low of 33. Seems like this might be off by just a little bit. And then the final low here was at 26. So either the fourth wave high is in here, and this is a series of 1-2s, and we're going to be screaming to the downside, or we'll put that final. And see, this is, I don't want to go into too much detail about the Elliott wave stuff. I know it loses a lot of people, especially if you're not familiar with the Elliott wave principle, but basically we would be looking for 5 waves up into that high. Okay, but like I was saying before, this is the non-back adjusted truly traded prices, showing you the actual high and the actual low. If we go down to non-back adjusted, let me do that now. I'm sorry, back adjusted. So merged, basically you're merging and back adjusting the gaps between the rollover, between every single contract. So you can see here, chart on the left, that low is at 33. That's the true low at 33 right here in 2009. Let me just change this label real quick. This is the back adjusted on the right. Non-back adjusted, truly traded prices on the left, back adjusted on the right, and that low is at 88. So through, getting rid of all of those rollover gaps and splicing the contracts together without any gaps, it looks a lot different. You see this? So this is what it looks like with the truly traded prices, big ABC up for the W, sharp X wave down, and then another ABC. But over here, what we have as the Y, which, I'm, like I said, I'm still kind of vacillating back and forth on. That high at 55 does not actually break the previous high. So it looks quite a bit different on the back adjusted. And let's just kind of look at that for a moment, because right now it's looking like, it's already pretty close to that previous major third wave low there. And this is looking much more like a triangle, which actually makes a lot of sense, because this is a perfect A wave up. This is a perfect 3 waves up, a sharp B wave, and then kind of a crazy massive sideways move here, but still nonetheless an ABC, A expanded flat B, and then 5 waves up for C. So we have this kind of contracting triangle here on the on the back adjusted prices, on the back adjusted contract. So, looking at the difference between the two, it's looking like we could be heading down much further, but you see we have this massive support here, and we have that support on both charts using totally different areas. Okay, so let me clean this up a little bit and show you exactly what I mean here. So if I draw that again from high to high, let's just do it without the median lines, just the trend channel. You see that? So we came down and hit the bottom of that perfectly, the channel, which is what you see over and over and over and over, which is why we use market geometry, because the markets trace out these channels and across all the time frames. And when we have an area that comes together with multiple market areas in the market geometry, a confluence of areas, then it's a very high probability spot for a reversal. But here we've hit it once, and now we're back down to it again. 44.31 is the back adjusted price of that low. Okay, so we still have yet to take out that low even on the back adjusted. So until we take out that low, I'm still going to look for that push to the upside. It's going to look very odd though, and this is why I'm kind of going back and forth between the back adjusted and the non-back adjusted. That would look pretty strange on this back adjusted. Actually, if I'm just thinking for a second. Actually, I don't think it would look all that strange. If we got a solid 5 waves straight up into that high and break above this high, then it would just look like a typical big A wave up and then a long and drawn out B wave down here. And then 5 waves up for C. So maybe it wouldn't be too bad, but we would have to, already have that low in. And when you look at the areas on the 240-minute chart, it's kind of looking like we do have a pretty nice low here. So I know I spent a lot of time there on these 2 weekly charts, but this is a pretty significant area that we're at in crude. And the low that we've just made, was that yesterday or today? I think it was actually made in the overnight. It was made last night at about 7 o'clock. So this could be a very significant swing low, out of which we move up into 59 or 60. That's why I'm spending so much time on it here, for crude and using the higher time frames, the weekly charts. So pretty massive areas that we're at. We found support on it once already, and it's looking like we're finding support on that again. So let's go to the 240. All right, so this is the 240-minute chart. I'm not really even going to bother trying to count this mess down, but it does look like just a really large 3-wave move to the downside. This is, you could argue with me about this section here, but this looks corrective to me. So it looks like we're just in the middle of a really massive correction, and we're, going from one side of the channel to the next, all the way down into this low. And now we're at the bottom of it, and we're turning up out of it, just like we did the last time we were at this channel low here. Okay. So chances are we're going to use this as support, and you're going to see a lot of buying come in next week. And you can see the areas here on the 240-minute chart. I'm just connecting from high to high It's drawing the channel line automatically from the low. That's what we turned up from here. Now this low was a very dramatic kind of a selling climax. Supposedly there was some hedge fund that was long a huge amount of contracts in crude that liquidated that day, which drove the prices down incredibly fast for this last 4-hour bar. And the only issue I have with this is that we've retraced over 90% of that move up out of that low. So that's pretty odd. But, you know, it could be that this is the big A wave up, B wave down, and then a giant C wave up for the end of, you know, whatever you want to call it, a double three or a triple three. Just a big, massive correction on the weekly chart. So if this is the major low, and it's starting to look like it is, until this low breaks, I'm going to be looking for a push, big push to the upside. You can see we had a pretty nice and clean, quite perfect 5-wave move to the upside here. And you can subdivide those perfectly into sets of 5 waves. That's why we use the Elliott wave so much, because the market repeats these patterns over and over and over. And you just see it all the time, 5s and 3s, 5s and 3s. So we have a nice 5-wave move to the upside here. And then what I think is a double 3 down into this low. So you have a series of ABCs down. You have a perfect 5 waves down for A, 3 waves up for B, and then 1, 2, 3, 4, 5 for C, A, B, C for X, and then 5 waves down for A, 3 waves up for B, sorry. So, I mean, you see these 5s and 3s all the time. And then here we've got 1, expanded flat 2, and then a big, strong 3rd wave down, sideways, tiny little 4th and a tiny little 5th for that final C wave of the Y. So that's a big double 3. It's 2 3-wave patterns put together. And then we have double divergence and the momentum. We've hit the 78.6 extension of the W wave, and we're back through the bottom of this channel. And you see we've rejected, you know, we tried to break through it, we rejected that, and it's pushed back up. So, like I said, until this low breaks, I'm expecting, you know, pretty strong move to the upside. If that doesn't happen Monday, then I'll reconsider. I mean, if we break this low, then I'll definitely be looking for massive move to the downside. Obviously, we would be breaking through this big channel on the weekly chart. So if we do break that, you know, I'm not going to be looking for a higher low in here. I'm going to be looking for pushing down to new lows. Okay. So this is kind of the area of whatever you want to call it. It's the most major area that we've been at since we were at it last time back here. Okay, so if we start pushing up pretty fast, then you can expect pretty big ride to the upside. And of course, we want to try and be a part of that. So, and this is just the hourly. All I've done here, since this is a kind of, you know, huge selling climax, it really went straight through the bottom of that channel. Excuse me, I've connected to this high. So I'm kind of slicing through this swing high here from back here. This is the major high, going through that one to this high. And then from the ultimate low there, the big major swing low. And you see we've come down to that just about perfectly. And then the next major area we have there is just connecting the major lows together. This is the big push, strong momentum push to the downside. That's the final momentum swing low. And then here's another big, fast, strong momentum move to the downside. That's that momentum swing low. So this is where a lot of demand came in, pushed it up. This is where a lot of demand came in, pushed it up. You've got the channel line from that, which gives you the high right there perfectly. And then you've got the lower median line coming in right there at 1, 2, 3, 4 lows in a row. And then when it intersects that much larger channel, then you put in the final low and it gaps up out of that. Okay, so what we did reject down from here, though, is just a simple trend line from high to high. Yeah, I know it's going through here, but that's fine. This is the big X wave high. So that's the separator wave of these, all these waves. So that's kind of the midpoint of this push down. And you see we've pulled right back to that here and rejected down. So if we can get up through that on Monday, maybe Sunday night, probably Sunday night, then I would expect to break through the top of that channel and start getting a pretty strong push to the upside. Any questions about crude at all before we move on? And yeah, let me send me that, Josh or Clint, that disclaimer. All right, so I'm going to move on to, I'm on a different computer. I don't have it on this computer. Let's see, let's go to the 6E. How did this happen? What in the world? Seem to have messed up all of my market geometry on this one. All right, let's start with the weekly and then we'll move down. Here's the weekly. All right, so I'm sure there's some of you that have been, watching these every week over the past several weeks. Of course, Josh did I think he did the last 3. And I'm sure his analysis is pretty close to mine, typically is. But what I'm showing you now is a slightly different count, the way that I've been counting this move to the downside. Of course, we had been saying that we were thinking the low is in since we've had that big push up. I had a really nice long out of the euro. I guess I'll go over that. Josh might have gone over that last week. But it's been pushing up really strong, and I expect that to continue for quite some time. So this is the inception of the euro here. So when it opened, it came crashing down for a while, and then we get this really nice, I mean, this is picture perfect Elliott wave, which is why we use it. You have big push up for the first wave, back up, massive retracement back down, almost to take out that low, which is a typical wave 2. And then you got 1, 2, 1, 2, 3, 4, 5 for 3, 4, 1, 2, 3, 4, 5 for the 5th wave of this massive 3rd wave up. You see? So this is why we use Elliott wave, because it works. Not all the time, but enough to grow an account. And I'll actually show you my track record here in a minute. And then we have a really nice big expanded flat with a perfect 1, 2, 3, 4, 5 for the C wave down of that 4, and then a massive 5th wave, not quite as big as the 3rd wave, but still pretty big. And then we get the massive sell-off here. Okay. Out of that, see, I was kind of counting this a little bit different, but that was, when we started that massive sell-off across all the markets back in 2008. and 9. And then we went into this extended triangle and, never really went anywhere. I had a big push up, big push down, big push back up, right back down, and then back up here. And this is in hindsight, I mean, I've always been kind of going back and forth whether this is a ABC for A and then a big B wave up and then trying to get 5 out of this, or counting this as a triangle. I like it much better as a triangle now, especially seen as we're counting this as complete now. See, we were wanting previously another push down to take out this low and come down to parity, potentially down to parity, but somewhere right around there, which was right around in here. So we were wanting that final wave down, which didn't happen. And now looking back at it, of course, we never made it down to the bottom of these channels either. And I'm thinking that is significant. I'm thinking that is even more reason to suggest that this is a very important swing low and that we're about to be pushing straight up in the euro and obviously down in the dollar. So this big triangle is a big B wave. And when we take the wave relationships, we take the size of this wave down, this A wave down, and then we bring that back to the end of the B wave to extend it forward to find the end of C. You see you have the 100%. Oops, let me just delete that one. You have the 100% line right here at 1.03310. Okay, it didn't quite come down that far, but you can see it looks a lot more symmetrical when this is actually counted as a triangle for the B wave. All right, then we have a tiny little 1, 2, big third wave down, triangle for 4, and then 5 waves down from the end of 4 into the 5th wave low here. Okay, the only thing that I found on the weekly chart that's actually coming in upsloping at that low, and it's pretty significant in my opinion, is this warning line of the channel. So warning line of the channel is just, well, this would be the 100% warning line. It's the width of the channel subtracted from the bottom of the channel. Okay, so you have the full width of the channel. It kind of rode up that kiss goodbye line here, finally put in the B wave high right up around it, and then came straight down to that warning line. And it's been pushing, screaming straight up ever since. I'd say that's pretty significant, and the major low is in. And I think we're about to see some pretty wild movement to the upside here. All right, so that's my weekly chart of the euro. So I would be expecting, this would be a wave 1 up, big 2 down. So over the next, 5-10 years, maybe, we'll be going back to take out that high. And that would mean that the dollar would be moving down over the next 5 to 10 years. All right, so let's go to the daily. Just kind of push through these little more quickly. All right, so this is the daily 1440 minute, essentially the same thing. So we have a big wave 1 up, wave 2 down, another wave 1 up, wave 2 down, and then we start getting vertical in here. Okay, so the next major area that we have, I think we have plenty of room to, almost 500 ticks to the next major area. And this is the 240-minute chart. You see the same big wave 1 up, leading diagonal, big wave 2 down, and then another 1, 2, and then a perfect 5 up to complete the third wave up. All right, then here, let me just show you this. So at this low, this was one of the major trades that I had last week or the week before last. What was it? It's been a few weeks now, almost 3 weeks. This was a big channel to the upside, right? We broke through it, pulled back to it once, pushed up again, another 5 waves up, and then came down in 3 strong waves to the downside here and pulled right back to the top of that channel again, right where you would expect to put in a 4th wave low. To find that 4th wave low, you typically draw from wave 1 to 3, and then the parallel from 2, or you simply draw a trend line from 0 to 2, and sometimes the 4th wave will come in on that trend line if it doesn't come in here on this channel. And it's actually right where that median line intersects the channel line, right on top of that larger channel that we've broken out of and pulled back to, that we found support. And you can see the volume. This is how we confirm the areas with the relative volume. This is a big selling climax bar, followed by a narrow range churn bar, indicating that you have a huge amount of demand coming in at that low. And then we push up, you get your first major resistance come in right here on this bar, which is at this high. That knocks it sideways to down for a day and a half or so. Then we get another big push. See, I actually got out right in here. I was wanting to ride it up to new highs, but typically the way that I'm trading, if we have an A, B, C, if I'm buying that C wave low, if we make it back above the B wave, then I'm typically satisfied, especially when I think this one was over 500 ticks or 450 or something. Or let's see, I don't think it was that big. Let me see. Yeah, it was half that. It was 250. Okay, so this would be the spot where it would tend to fail if it were going to fail. If it were not to make it above the starting point of the correction, this would be a big A, B, C, correcting the previous major trend to the upside. If it's going to fail and keep going sideways, maybe do a much larger correction, that's where it tends to fail once it takes out that previous lower high. So it did that here. I exited. It did come down, but I didn't buy it back. And then it went up. I actually left that day, I think, on vacation, I want to say. I left on the 1st. Yeah, I left that day. And then it did go up to a new high, and you see the 5 waves up. All right, so that completed the big 3rd wave to the upside, and then we were looking for a much larger correction, and we got that. We get the massive A wave down, expanded flat, B wave back up, and then 5 waves down for C. And let's see, we almost got that low. I think Ed actually bought that low. Didn't you, Ed? Yeah, I think you posted that in the chat room. But it just looked pretty scary actually at the low there. And we were thinking it was probably going to come back and test that low, maybe move slightly lower, at which point we would go ahead and buy it, but it didn't happen. And let me show you that on the hourly. Well, just to show you this one, you can see the warning line of that channel, which is what I showed you on the weekly, right? You see the big high to high channel line from the low, and then the big warning line coming in at that low, and then it turns up. That's what I'm showing you here on the weekly on a much larger scale. This is the fractal nature of the markets. So we have a big channel. It moves down the same width as that previous up channel. hits that warning line, and then starts pushing up. And that's the same kind of thing that's happening right here. Now this is the rollover gap because we just rolled over today, actually. So, well, I guess starting last night. So that's the rollover gap, but I do expect this to keep on pushing up in 5 waves. And the low was actually quite nice. I had it all mapped out, but somehow I had to, everything got messed up here somehow. So let me redraw it. It's just simply, yeah, look at that. What the heck? Huh. Let's do it here. I'm just drawing from major high to major high. You see the low coming in there? We were actually drawing to this high, as a matter of fact. And we came down and we hit that perfectly to the tick. But you see there was no real sign of strength yet in here. Yeah, we did have a very perfect 1, 2, 3, 4, and then 5 waves down for 5. 1, 2, 3, 4, 5. But you didn't have a whole lot of time to make that decision, really. And then we were hoping it would, come back and hit that line again. It just never did. And then it went sideways for so long. Overnight, you would have had to have held a 78.6 retracement. Let's see. I think it was, yep, exactly 78.6, which we see over and over and over. So you would have been, had to have been willing to have held through that, which is usually what it takes to get into these big trades. And then it started moving up. So needless to say, we'll be looking for new highs pretty soon, hopefully next week. So we'll be looking to get into this long here. Not sure what to make of it at the moment. I guess that is potentially the first 5-wave move to the upside. If you want to call that the 4th wave. Yeah, that works. So we might get a really nice correction back down. I would say if this is going to be a major high. See, I need to roll this over actually. Well, let's look at the other one. Let me see if I have a tick chart. Let me just do this for you real quick to see what price we might actually put in that low. Give you something to watch out for. Because I think this is going to be a nice, strong push to the upside. Trying to load it here on the tick chart. The new contract. We're on the September contract now for the 6E as of today. And let me just do this while this is loading, just to kind of validate Elliott Wave again. I know I say this over and over, but evidently people have a problem with it. What does the 4th wave typically do? It finds support at or near the end of the previous 4th wave of one lesser degree. So what would that be? Well, that would be right here, wouldn't it? Isn't that the previous 4th wave of one lesser degree? We have a really huge wave 1 up, wave 2 down, 50% correction of this wave 1, and then a strong 5 up for wave 3, nice ABC down for wave 4, and then 5 waves up for 5. So this is the previous major 4th wave low of one lesser degree. And we tend to find support at or near the end of the previous 4th wave. And that's what we do. But see, we take it several steps further. Lining up the areas in the market geometry across the multiple time frames, and then validating those areas with the relative volume, and momentum divergence on the faster time frames, much faster. So we're finding the areas across multiple time frames and then validating those areas on the faster time frames. And then you see the perfect hit of the bottom of that channel as well. All right, so if this is a complete 5 up, it may not be, it may just keep extending up. But if we are going to put in a retracement back down, let's see, it may not, the tick chart may not lend itself very well to doing this. I could at least give you one area here, and that would be 1.12350. That would be the first spot for support. Let's say we do that on the minute chart as well. If we are going to do a major high there, it looks like we may. I mean, you have a major spike in the relative volume here. So you have a big buying climax, which is also a major spike in the volume you see. And then that knocks it sideways for a few hours, and then it creeps higher, puts in another major spike in the relative volume. So maybe we'll actually come up and touch the top of that median line, upper median line, and then make it back to this median line, which is at 1.12. Let's just say 1.123, or the bottom of this channel, which is at 1.122. So somewhere in this vicinity, we'll be looking for the next long setup. That's if we don't keep pushing straight up, okay? So that is the 6E. Any questions on any of that? All right, good. And just to do this, I'm going to show you my results here in a second after we go over the Nasdaq. So before I do that, well, before and after, oh, that looks kind of weird at the bottom there. Just to kind of let you guys, well, I'm sure most of you know by now if you've been trading for any length of time, obviously don't trade with your lunch money. Don't trade with your rent money. It's incredibly difficult to make money trading the markets. And they say something like 90% of people fail. I've seen statistics that say upwards of 94, 95% of people blow their accounts. It's only, I think, the last brokerage thing that I was looking at that talked about that, I think it was like 4 or 5% of their accounts were actually making enough money to support a small family, you know, just a middle class family. So while not, you know, there may not be, how should I word that? Yeah, okay, there's 90% of people that fail, but there's really only about 3 or 4 or 5% that are making enough money to support a family. So it's incredibly difficult. And it's taken me, how many years? 2007. It's taken me 10 years to get to the point where I'm actually able to make money consistently. Let's go to the Nasdaq and I'll show you my account while we go over this. So what I wanted to do was start a live account with as little amount of money as I could possibly, to show people that it's able to be done. What I did is, you know, to prove all this stuff out, we've been developing these tools now for a number of years, since 2013. But I started this track record after putting all of these methods together. I was building out automated trading systems for people, doing all this back testing and system building, and realized that everything that I had been taught, most of what I had been taught, almost all of what I had bought as far as technical analysis, indicators, trading software, blah, 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 it was pretty much all useless. And the only methods that I had vetted that were useful, number one was market geometry. I mean, the market geometry is just incredible when you learn how to apply it properly and you do it on a consistent basis. You see the power of it, but then volume. So volume is incredibly important, and a proper analysis of volume is what is important. Obviously, it's volume that creates the market. It's volume that creates the prices. So I would say that volume is the first order indicator and price is actually secondary. And then all of your other technical analysis indicators, all of your, ridiculous moving averages and everything built from an equation is, I would say, tertiary or third. And it's really volume that is the most important as far as an indicator. And then the price action traces out geometrical patterns. It just, how or why, I don't know, but it just does. So using the market geometry to to find the areas that we want to trade, especially when they come together in multiple areas across multiple time frames, and you get that confluence, and then confirming with the volume and the momentum divergence on the faster time frames. So we want to see price actually slow down into those areas. So I proved all this stuff out with a sim account over about a year and 4 months or something, and the results were just out of control. I'm not even going to show them to you, but I am about to show you my live results, and I started with the smallest account that I could. I'm not showing hypothetical or simulated performance here. I'm showing you an actual live account that I started with $5,000. So again, I wanted to start it low enough just to show people that it can be done. And I did that, I think it was December 1st. I want to say it was December 1st, but I don't think I started, or maybe it was November, but I didn't start trading until the middle of December. Yeah, I opened it November 16th with $5,000. I didn't actually take a trade until, okay, there it was, the end of November. And then I'm, trading in front of a live audience in the morning. And then a little bit here and there in the afternoon. Sometimes if I see a great setup, it may occur 2 o'clock in the afternoon, or it may occur at 10 o'clock at night. So whenever I see a nice one, I take it. But I did very well for a little while. I got up to about 18.9. So I made it up to, there's 14 by it was about 15 by the end of February. Let's see, I had a massive drawdown though, where I was making some pretty ridiculous mistakes here. Yeah, see, 18.6 by the end of March. And then I started, I don't know what got a hold of me. I started adding to losing positions rather than taking my stops. So I started canceling stops and adding to a losing position, which is rule number 1 not to do, right? That's how you blow an account. That's the fastest and most common way that people blow their accounts, is adding to losing positions. And somehow I fell back into that trap. I had done that before and blown an account twice. I don't know, psychological. It's trading is mind numbing sometimes. But anyhow, I got down to 14 grand here. It lasted about 10 days or so. And then, regrouped. Just had to kind of step back from it for a little bit. And see, I took like 3 days off here from trading. Yeah. That might have been the weekend, but I didn't take a lot of risky trades there for a little bit. And then finally made it back up to 20. And now I'm at 23 as of today. So that's $5,000 to 23,000 in 6 months, a little over 6 months. So what is that? It's like almost 400%. Yeah, almost 400%, I guess. So it's like 360% or 375% or something. 360 something percent, I think. So anyway, I wanted to be over 30 by now, but you know, it is what it is. If I wouldn't have gone through that drawdown, I would be well over 30. But this is just to kind of show you that, well, it's for one thing to keep me honest, but just to show you that it's also possible. And you know, I'm trading in front of an audience. I'm working full time, developing all of these indicators, all the software, and you know, working constantly, and still I'm able to grow an account using these methods. So it's definitely possible. You just have to, number one, have something that works, have a methodology that's actually going to enable you to make money trading. And it's so difficult to prove that out. You want to believe what people tell you. You want to believe marketing. People are really good at marketing, but fact of the matter is, if you're going to prove something out, it takes a lot of work to prove anything out. And you know, unless you're able to kind of automate some of the rules and do some type of back testing, or you have enough time to forward test, chances are most people aren't going to do that kind of work. And that leads to a decade of using ideas that are totally useless. But the fact of the matter is, most people don't know until after they've blown one account or two accounts or three accounts. So Carlos is asking, how many contracts am I trading now? I'm still not trading more than 2 or 3. I don't like to trade more than one. Well, if we're talking about different markets, for let's say for crude oil, I wouldn't trade any more than 2, one per 10,000 bucks. But for the 6E, I would trade no more than 4, one per maybe 6,000, 5,000 maybe for the 6E. And then for gold, about the same as crude, one per 10,000. And then what's the other one? Crude oil, Nasdaq. Oh, so Nasdaq would be about like trading the 6E. I may do up to 4 on the Nasdaq. Typically not more than 2. It just depends on. Well, see, that's one thing I'm not that strict about yet. Once I get up around 30 and 40, right around that area, then money management becomes much more important, obviously, when you actually have the potential to trade more contracts. So that's when I'll start getting really strict about all of that stuff. James is asking, how are the updates coming? The updates are coming along, but man, it's a incredibly tedious and slow process. I have the readers now for the toolbar. I just got them today, and I'm testing that as soon as we get done here, so that we can actually automate the market geometry in Bloodhound and Blackbird, or let's say semi-automate it to access the areas and then send in trades off of those areas, and then manage the trades according to the areas in the market geometry. I'm not going to spend any time going over that now, but it's coming along. We'll have an update by Thursday, next Thursday. You know, wherever we're at, it may not be completely finished, but we'll go ahead and release it on Thursday, as we have that webinar with Shark Indicators on next Thursday. Let me give you guys, Josh or Clint, do you have the link to that sign up page? I think it's actually on the Ninja Manager, so I can post that in the chat. So that'll be next Thursday. I'll go into more detail about the methods, how we can use this inside of Bloodhound to semi-automate the setups, the trades, and then how we can semi-automate or fully automate the trade management inside of Blackbird. So we'll be going over the details of that next Thursday and probably Friday. Well, let's say probably Saturday or Sunday morning or afternoon. Well, it won't be Sunday, but it's going to take at least a 2, maybe a 3-part webinar series to cover all this stuff, because it is incredibly well, there's just, I was going to say complex, but there's just a lot to it. I mean, there's a lot to cover. If I were to want to explain this to people properly, I can't do it in just 1 hour. So therefore, we'll have a part 2 on Saturday afternoon, likely. All right, so let's do this. Let's go over the Nasdaq. I have to. I'm so sick, guys. I'm sorry, but I have to pause for a moment and go get some water real fast. So I'll be back in about 60 seconds, maybe at the most 2 minutes, but I'll be right back. Okay. Apologies for that. Yeah, that link for the registration I put in the chat for next week's webinar when I'll go into more detail about the methods, the indicators, everything. All the software has been, well, we've been working on this update for over a year or more. Let's say the past 6 months with 2 full-time programmers. Or what, I think it's been 5 months since you started, Josh, 4 or 5 months. Anyhow, we'll go into more detail next Thursday. There isn't any detail about, the subject matter. I'll fill all of that in likely tomorrow once I begin building out the structure of the templates and the Blackbird settings. So I just have to program out the trade setups inside of Bloodhound. So anyway, let's do this. Let's go over the Nasdaq, and then we'll call it a weekend. I think I want to say that we've made another major low, but I'm still not quite sure about that. You'll see what I mean when when we get to the hourly chart in the 240, and I want to compare that with a chart of the ES, because the ES, I was looking at Ed's chart earlier, a member of our trading room, and it looks like this move down over the past week or two is actually a big triangle. So in that case, yeah, we would expect another big push to the upside. I was able to get a really nice short yesterday out of the Nasdaq. Wanted to short it last night, but I don't know, I couldn't do it. Anyway, we made a major low yesterday where I exited, and that's what I want to kind of go over now. Let me just start opening this this chart of the ES. Okay, so this is a weekly chart of the Nasdaq. This is the big major low in 2008 and 2009, which was, of course, a much lower low in the ES and the Dow. But in the Nasdaq, this is a wave 2 low. And then we have this big, massive third wave up, which I don't think is complete yet. I don't think it'll be complete until we make it to the top of this channel. And if we're talking about identifying a target based on market geometry and Elliott wave together, using the fibs, if we're looking at a big 5-wave structure to the upside, we've got a nice 1, 2, 1, 2, 3, 4, 5 for 3. Big, I think this is actually a double 3 down for 4. And then I don't think we're anywhere close to putting in this 5th wave high. So that's not going to be the, it's not going to be the final big 5th wave swing high that you see a lot of other Elliott wave people talking about. I think this thing is going to keep going for a while. I think we need to make that next big swing high at the top of this channel. And then it'll look like maybe we're going into a big recession. Maybe it will be a recession. But I don't think this is going to be the big one. I think once we come up and hit the top up in here, which is right now about 2,000 ticks away, then we'll go into prolonged correction, which will be larger than what we saw back here, which actually was a recession, wasn't it? No, it wasn't actually a recession, but yeah, this nice little sideways move here. So it will likely be about twice that size here. I don't think we actually went into recession anywhere. Maybe back in here a little bit. But obviously this was the big one, which was on the verge of being a depression. So what we have going up is, nothing even close to being complete as far as the wave structure is concerned. We have a big 1, 2, and then now another 1, 2. I think maybe this is a 3, or maybe not quite. And then we will do a much larger correction. This is what we have to kind of figure out now. Are we in that larger 4? Potentially it's over right there. And now we're going to go up in the 5th wave. Okay, so that's what we need to figure out. I don't think this could possibly be the 4th wave relative to the size of this big wave down. So essentially, we're just kind of mapping out to figure out what should the next major correction look like. And you do that by looking at what do the previous major corrections look like. You've got one here, one here. And if we're looking at this extended move to the upside, what do we have back here that looked anything like it? Well, you've got one little stretch of market right here that didn't have very deep pullbacks. Just had little minor, maybe 1 to 4 week pullbacks. And then you get the next big one right about here. And then you get another one that's even sharper, even deeper. And then here's a really nice ABC. Let's kind of zoom in on that. Here's a nice little ABC. And then we start getting really congested. Ranges get a little narrower. When we break the previous high, we don't move up nearly as high. And you get this kind of staggered looking waning momentum into that final high, which the final high was actually a big buying climax. So we don't see anything like that in here yet, which is why I'm not anywhere close to looking for a major swing high. Okay, it needs to, if we're at all-time highs, if it's going to put in a major high, it's going to need some time to unload all of those positions that all the big banks have. And I don't think it's going to be, a super fast, immediate rejection out of that high. I think it's going to be one of those typical rounded tops that you see, which is typically what it looks like at the end of a major trend. The really sharp moves, the really strong V tops and V bottoms are typically at the ends of corrections. So we wouldn't expect a V top at a major high unless, of course, it's like a big, massive bull market in a commodity or something like that, where you get that blow off top, it goes vertical, and then you get, one bar on one day that moves over 8 or 10% or something like that. You get that big, massive blow off top. That's not something we typically see in stocks. In gold, yes. In crude, yes. Commodities, yeah. But with stocks, at major turning points, you tend to get this kind of rounded look. All right, so all that to say that we're not anywhere near having something like that. We were at the top of some channels previously. So if I were to draw from low to low here, you see we were riding that channel here, and we were starting to get a little bit of a rounded look there, which made me think that, okay, well, maybe we'll go into a deeper correction out of this high, and we'll actually get something that looks like this. But we didn't do that. We broke right up above it. We actually gapped above it. Excuse me. We gapped above it the following week after we closed above that channel high, you see. We gapped Sunday night above all of that, and then began that next big push to the upside. So this is where we began stalling out. Undoubtedly, people with money that have lots of long positions are unloading some of that. Anytime you get to the top of a major channel in a market that's been trending to the upside for a very long time, when you get to the top of that channel, you're going to see some profit taking. And that's what was happening here, but it was immediately met with buying, and they pushed it up. And then we begin to get that kind of almost parabolic kind of a move up in here. Probably looks a little more so on the 240-minute chart, but you do get increased momentum in here. Okay, we want to see a big correction and then start going back up on waning momentum before starting to look for a major swing high. All right, so that is the weekly chart. That was a lot of information really quick. I don't know how I started talking that fast, but if you guys have any questions, don't be afraid to ask. At any rate, this is the major channel that we have on the daily. So this is a daily chart. You can see the relative volume is here with the momentum. This is where we were talking about running into the top of that channel, a much larger channel where we went kind of sideways, get that little bit of a rounded look, start losing momentum. See? Get a fairly significant correction, but not nearly anything like we had seen back in here. I'm not going to bother drawing more channels. I will draw a parallel from here, as I think that will coincide with some of these larger channels. So getting up above 6,200, I think, is what we're looking for. At any rate, this is what I want to understand here is, okay, we've broken out of the top of this major uptrending channel here, right? We pulled back to it in a very strong and fast, what was that? I think it was like a day, not even a day and a half, straight down into that. And then we continue moving higher right out of that low. I was actually short in here thinking I was going to get a lower high and we would put in that deeper correction, but that didn't work out. I still ended up making some money on that trade, but it failed and then continued to new highs. So Once we did get up to new highs and continued moving higher, then we get another very sharp, fast reaction straight back down and into the top of this channel again. All right, and then we find support here. Push back up in a B wave high, come back down in a C wave to barely take out that low. So I'm thinking that we'll likely use this as support and move up to another high. Maybe we, just go up to a slightly higher high and we're going to do a big expanded flat out of this and put in that larger correction. Maybe this is the beginning of a larger correction, but I think we found support here and pretty strong support. And we'll try and corroborate that with the ES, the S&P 500. All right, but let me just kind of show you a little bit about the market geometry and how it works and why it's useful. Let me just delete all of this, remove some of this. We'll go over the divergence and the volume here in a second, but so if I'm right here, we're coming down, down, down. How do I have any idea as to where the market is going to put in the next major low? What would you do? You're going to use a moving average. Those are significant. Why? Supposedly because enough people use them and look at them. That's all garbage. What does work, however, is not arithmetic calculations, but geometric calculations. So just simple trend channels and median lines. Sounds crazy, but it works incredibly well. And you see it work over and over and over. This is the major area. This is how supply and demand actually works. A lot of people will teach supply and demand as, okay, well, this is where we had demand come in right here. So therefore, when the market comes back down to that area, we'll likely see demand come in there again. Well, that's not true. That's not the way it works at all. Future supply and demand is a function of the previous areas of supply and demand. So here we had a ton of supply come into the market, yes? Came in right here, pushed it down. You see a lot of supply come in. We go down, down, down. Here we had a lot of demand come in, right? This is the next major area of supply. Why did the demand come in there? Because if we draw from major area of supply to major area of supply and then draw a parallel from the major area of demand, typically we'll find demand at that parallel. And that's what we did here. So this is just a typical common trend channel, but when you do this and you combine it with the median line, so for instance, a lot of times we'll draw both the trend channels and the median lines at the same time. And oftentimes right where that median line or one of the median lines or some other median line intersects the channel or one of the other baselines or median lines or whatever, you have an area of confluence coming together. And you have one bar intersecting two or more of those areas in the market geometry, you tend to have these really strong reversals. So these are the things that we look out for. And you see this over and over and over. So where are the other major areas of supply and demand on this chart? I would say you're going pretty much vertical here. Not vertical, I'd say you're getting parabolic right here. But you've got pretty strong momentum right here. It's a little bit sideways, and then right here, it puts in this range. So this is kind of where the range starts, right here and right there. Maybe right here. I would prefer that, even though it's slightly lower than this, as that's where the major supply first started coming in. And then here you've got demand, demand, demand. You've got supply, supply, supply. This is the major area of supply. Obvious demand, 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 demand. And then supply, supply. So if I want to find the next major area, if we're coming down, what am I going to do? I'm going to draw channels. If I'm looking for a low, I'll tend to draw the channels from high to find the next low, but I'll also draw in the trend lines from low to low in an attempt to find that next major low. But this is the first major area of supply. Supply, sorry, we're at a high, so supply to high. And this is the high major area where all of that supply came in, and then see it's finding this low automatically. You see that? And then this is where we found the demand almost to the tick. We come back up almost to the midline of that channel, and then come back down and find support there. Again, we just barely tick out the low, I think by literally just a few ticks, maybe a couple of points. What was it, 41.25? Yeah, just a couple of points, 2 points. So 8 ticks. And then we turn right back up. So this is looking like now an ABC, but is it a complete correction? This is what we see, big, strong pushes to the upside. You know, you can try to count that, but it doesn't really matter. You see big separation between the corrections, right? Big, strong pushes up, very small corrections back down. Fairly significant correction back down here. Sizable one here, which was just a really super fast, sharp correction. And then now here, another sharp correction, the sharpest one we've seen in the past couple of years. Or let's say at least in the past year, probably. Maybe this is similar. So is this. But this is the sharpest one we've seen in the Nasdaq for a little while. Okay, so maybe this is just the beginning of something larger. And that's what I want to try to figure out. Sorry, and again, we would also be drawing in the trend lines. Let's just see. I mean, what's the most obvious one we have here? This would be the major low. This would be the next major low. And it's essentially the same channel, isn't it? It is the same channel. And this is the widest perpendicular swing to that baseline. That's the widest point perpendicularly. And that's what gave us the high there, see? So that's what we were waiting to get up to. Once we get up there, you see the selling come in. How do we see the selling come in? Well, you see it in the volume. Why do you see that? How can you tell? Well, you've got very high volume here. And don't, just a slight difference in volume from one bar to the next is significant. So just because it doesn't look huge, it shouldn't be looked over. So here is where you had the first big churn bar. Churn just means very high volume per range, and a narrower ranging bar. So you have a kind of a climax here, not a huge amount of volume, but you have a very wide ranging bar. Come up, hit the top of that channel, somebody begins selling, obviously, as you have a big churn bar at a high. And that simply means that you've hit resistance, and it's taking a lot more volume, a lot larger number of contracts to move the market every tick further than was previously necessary to move the market. You see, so you've come up, you've hit the area, somebody begins selling, volume is increasing, but the market's not really moving anywhere. So somebody's sitting there absorbing all of that buying and they're limit order selling or whatever in here, and it knocks it sideways. They continue selling. It gets one last attempt at working it up. You get a little climax, a slight climax there into that high, and then we get knocked sideways for a while. And then here you get two churn bars back to back, and I think that is Memorial Day, yeah. And see, they tend to use these holiday periods to put in major turning points. You see that quite a bit if you go back and look at your charts in a lot of different markets. You tend to see a lot of major turning points. Around holidays. It's maybe not the major turning points on the weekly chart, but on an hourly chart or a 4-hour chart, you'll see some pretty significant moves occur on or right around some of those bank holidays. Dimitri is asking, so I never use static S&D zones? No, I don't find them useful at all. I mean, I can see the previous highs and lows on the chart. I don't need an indicator to do that for me, but then again, I'm using a lot of charts. I'm using a lot of time frames. So I have 6 screens, and I can see every aspect of the market that I'm trading, as far as number of time frames and how far back I can see, and the major areas and all of that. So while sometimes major turning points will align with previous swing highs and lows, especially on fourth waves, which is what we were talking about right here. Fourth waves do tend to find support or resistance at the previous fourth wave of one lesser degree. While that is true, it's not necessarily because of that fourth wave. It's not because that's a low. The fact is, you have a major warning line of this bigger channel right there coming in, and you have a perfect hit of that channel right there, and that one happens to be somewhat flat. You see, just slightly upsloping, which is why this is higher. The low is higher than that previous low. So this is one of those examples that keeps people believing that static supply and demand zones somehow govern the movement of the market, or somehow, there's whatever bunch of banks or somebody, they were buying here several days ago, so that means they're going to be buying at that price again. No. Nobody knows that. Who knows that? I don't know why somebody could say that that's true when they know that. You know what I mean? So when you start working with the market geometry enough, and you do this over and over and over, you see how supply and demand truly works, especially when used in conjunction with the volume, just like you see right here. I mean, this is why I bought this low. This was one of the biggest trades that I've had in a while. I wish I would have held it to new highs like I wrote down that I was going to do, but that brain of mine, it gets me. So I get that gap down here. Actually, this was when old Italian ECB guy, I don't know why, Draghi, was speaking. So when it opened back up, it gapped down, but it gapped down right into that major area where you have the symmetrical move there. You have the typical, high to high. You've got the median line intersecting the channel line right there. That's the typical look to a fourth wave right there. Doesn't happen like that all the time, but when it does happen like that, you've got to pull the trigger on that. And then you have that 2-bar pattern in the volume, big selling climax, massive relative volume. And then the next bar is a huge churn bar, extreme density, which means very, very high volume per range. And it's a narrow range bar closing up off of its lows to put in that little obvious area of massive demand coming in. Paul is asking, do I use minute charts for better entry? I use both minute and tick because the areas that are created in the market geometry will differ from minute charts to tick charts, so I use both. And then as far as my entry is concerned, I'll fine tune that entry on the 2-minute or a faster tick chart. And the tick chart is typically about the size of a 1-minute, maybe a little faster than a 1-minute chart. So if you're looking at the number of bars that make up the tick chart, if I'm just looking at the first 3 hours of the morning, I want there to be about the same number of bars on that tick chart for those 3 hours as maybe a 30-second or 45-second chart would have. So I want it to be a little bit faster than a 1-minute chart, the smallest tick chart that I use. So yeah, I do use both. And then with the tick charts, you get to see the volume per tick, so the actual number of contracts coming in on average per trade. So let me just show you that for a second. So this would be crude oil. This is my larger tick chart. And you see I've got the volume per tick here, but behind it is the volume per range per tick. Well, I say per tick because it's on a tick chart. So if you were to divide the number of contracts by the number of ticks in each bar, then you would have the average number of contracts traded per transaction. So on top of that, I have volume per second, and we tend to see very high volume per second at, well, especially at V-tops and V-bottoms, so at the ends of really sharp corrections. It tends to signify a lot of market orders coming in all at once when you have those really quick pops in the volume per second. So for instance, right here, we have a huge number of contracts per second, but why do we have that right there? Well, really, it's just because we just took out that previous little swing high. So you have a bunch of stops getting run right there. Somebody was trying to sell it because, they're looking to the left. They say, oh, supply. And they're selling that, and then it breaks above it and runs all of their stops. So that's why you get a bunch of volume per second right there. And then at the high, you get the big churn bar. Let me turn some of this stuff off a little bit. So I'm just kind of giving you a little bit of detail as to the rest of the stuff that we use here. So this volume tool is getting incredibly accurate here. This is what we've been working on for the past several months, is making our volume tools more accurate and better, just all around better. But the signals are actually much more accurate and I think much more meaningful, or more significant. What am I trying to say? There's a well, you'll see on next Thursday. But here at the high, you have a narrower range bar than the previous bar, and it's very high volume per range, which is that plot behind the volume plot. Normally that plot would be very tiny and you wouldn't be able to see it, but we're using a factoring system, kind of a scale, to be able to see the volume per range behind the volume bars. See, so that's a very clear indication that we have supply coming in at that high. Okay, and here at the low, you've got what looks like a pretty major low. You've got triple divergence. This is the next tool that we use to confirm the areas. Of course, we want to see momentum. We want to see price slow down into those major areas. So remember, on crude oil, we had all of those major areas coming together, right? This is the back adjusted. You have the bottom of the channel there. This is the non-back adjusted. On the weekly, you have the bottom of the channel there. And then we have the 240-minute chart. We have all these areas coming together at this low. See, we broke through a couple of them by a little bit. And then even here, breaking through those, but right into these other two. And this one's a, I'll give it to you that this is not the typical channel. That's a little bit nuanced. So maybe not necessarily one that most people would draw. But the fact that we went so far straight down here makes me a little leery of the extreme low of that swing. I would much rather use the lowest closing price or the low of the next bar as opposed to the extreme price there. But anyhow, using this low and skipping that one, and skipping that high, we come in perfectly right there. So all that to say that, we've got all of these areas coming together there, but you've got this really huge, strong move to the downside. When do you actually want to try and buy that? Well, number one, you want to wait for the rest of the areas to get hit. Well, that actually starts happening, right here and right here, just eliminating this one, acting like that one's not even there. We're kind of riding this lower median line down. But if we're using the tick charts and the faster minute charts also, then we actually have some other areas coming together at that low. Give me a second here. So as we're coming down, we're kind of going sideways to down into that low. When we finally put in the low, see, it's in the middle of the night. But by the time we get to the bottom, excuse me, and then reach all those other areas, we have triple divergence in the momentum here. So we program this divergence indicator to recognize these different patterns, essentially. So this is the first divergence. This is the second. You see the higher lows, and then the third here, and then it even makes another third here with a slightly higher low. So you've got consecutive divergence signals. And then I want to say it came right down to the bottom of that channel. Probably, I think it was on the minute chart, actually. Let's see. Yeah, it must have been. I don't think it was in the middle of the night. I think it was like 4 o'clock or something. Yeah. Oh, sorry, you can't see it here. Yeah, this is what we came right down to the bottom of. You see that? So this is what I mean about the difference between the areas on the tick chart and the areas on the minute charts. So for instance, when I draw this channel high to high, you see how we come right down to the bottom of that channel perfectly to the tick right there? That's the final low there. And that's the big selling climax, which is also extreme density, meaning it's very high volume per range. And that's actually right around the rollover because we rolled over today, right? Yeah, today. So they're putting in a major low, I think, a major low right on the beginning of the next contract. And I think we'll likely go up for the length of this contract. And I don't think that's coincidental at all. So you see how we come right down to the bottom of this channel? If I create that same channel on the tick chart, we have totally different areas. Sometimes they line up perfectly on the minute chart. You see, it doesn't make it to the bottom of the channel. Sometimes they line up perfectly on the tick chart. So that's why we use both. But the volume is, it's a little different on the tick charts than it is on the minute charts. This would be my larger tick chart, and then my fastest tick chart would be this one. So what did we have at the low there? Well, let's see if we had, the smallest little channel here on the tick chart, maybe it lined up a little better. Yeah, it still didn't quite make it to the bottom. I think it did maybe right here, though. See, and that would be the smallest channel that we would use, and that would be the last confirming channel. And we would be waiting to get down to the bottom of that, just like we would be waiting to get down to the bottom of the channel on the 5-minute right here. And see, this is a much larger channel than this one. This one is only 9 o'clock, so that would be this high. You see, in that channel, if I were to draw that little channel, that might line up. Let's see. Yeah, no, it doesn't. You see what I mean? That's the difference between the tick charts and the minute charts. And that's why we use both. And then using different swings, different highs and lows, we have the market coming down to the bottom of both of those channels on climactic action, selling climax here. Sorry, guys, my voice is probably getting annoying. My nose is just completely clogged up. But here we have that big selling climax, very high volume, very wide-ranging bar, but it's such high volume. See, we have it auto scale so you can see more detail of the bars. It's such high volume that even the volume per range, which is that little red plot, little pink plot behind it, is very, very high. It's extreme. So, yeah, you see, it's an extreme spike in the volume. It's an extreme climax bar, and it's extreme density, which is very high volume per range. So that is, the thing we look for at a major low. And that major low, I mean, it's very difficult to try and buy something like that. And of course, if you're trying to pick a top and pick a bottom, I'm sure a lot of you guys know that that is a very easy way to blow your account, right? If you're trying to pick lows and pick highs, but when you're, let's say, I was going to say when you're good at drawing the market jump, but when you're well versed at drawing in the areas across the multiple time frames, you know how to read the volume properly. You see momentum waning into that low, then you can buy these extreme highs and extreme lows. Because what we're doing, see, if I were to have caught that low, which I didn't, I've been sick. Yesterday was the first day that I traded, and I traded the morning and didn't look at much of anything until late last night. But if I would have been paying attention, let me show you here. Yeah, that's the major area for this low to be put in right here. So having all this stuff mapped out, having your areas well defined, you're waiting for the market to move into that zone, you would be expecting a massive trade to the upside. And it's up to you how long you want to hold it. If invariably, if you're going to be able to hold for some of these bigger moves, you'll have to hold through some pretty large retracements. And over time, you'll end up giving back a lot of ticks. So you have to be consistent one way or the other. Are you going to, get in with a 10 tick stop and go for 30, 40 ticks and be done with it? Or are you going to get in with maybe a 20 tick stop and go for 3, 4, 5, 600 ticks? So in this case, I'm thinking this is a major, major low that's going to be going way up. So I would have gotten in there. This is the major area. We've got double divergence on the hourly. You see we've got, well, it's not showing up because it's such a major, or let's say it's a huge number of bars between these lows, and I'm only allowing the divergence to find swing highs and lows that are about 70 bars maximum apart. So you can see the waning momentum into that low just by looking at price. I mean, you have a huge selling climax here, massive down move, and then it starts going into this essentially a range, but it's a down sloping range here. Okay, so you have waning momentum into that low. And then especially on the larger tick chart, you can see that with triple divergence into that low. So when you're trading like this, you're able to get in, exactly at the area where the market is going to reverse, and you're able to use a pretty tight stop. So let's say we got in, maybe we didn't quite make it to, maybe we hit market and then we got filled somewhere up in here. So you would want your stop far enough behind that area to allow it to come back and hang on a second here, to allow it to come back, hit the line, maybe take a little while to finally move out of that low. So you want to give it some breathing room, obviously, and let the trade do the work, let the market do the work. Something's wrong with my toolbar. I'm constantly updating this thing and recompiling and testing, and for some reason it's not showing me the prices here, so I've got something wrong with it right now. But anyhow, this is our little risk to reward meter, and it is looking like that's about 42. Yeah, that's not even a 10 tick stop. Not even a 10 tick stop on that trade. And you would be looking for what? A break of this high at least. So that'd be at least 50 ticks. You're talking at least a 7 or 8 to 1 reward to risk. And if you're consistently taking those very high R trades, you're consistently making multiples of what you're risking, then you don't really need to be right all the time. If you're scalping, you're taking 10 tick targets and you're using a 10 tick stop. You've got to be right a very large percentage of the time to make any money trading like that. If you're trading like this and you're consistently getting very large reward to risk trades, you don't have to be right more than about 35 to 40% of the time to still make money. I think right now I'm at like 56%, 55%, something like that. That's with some pretty bad mistakes. So anyway, getting off on a tangent here, but I wanted to kind of give you guys an idea as to what, how we actually fine tune the entries and whatnot. Somebody had asked about, sorry, I'm having a hard time talking here. Somebody had asked whether we use, some smaller charts to get a better entry price. So at any rate, let's finish going over this Nasdaq, because I think this is a pretty major low here. And let's check out the 240-minute chart. Yeah, see, we've come back down to the bottom of the channel. Found support, pushed up really, really strong again, like we did here. So we've got a couple of really major signs of strength. I mean, of course, we have, the market's been trending to the upside pretty strongly for a long time. And it's hit these lows and it's immediately rejecting back up out of them, just like it did back here. So I would favor the low being in and at least come back above this high. And you see that's over 400 ticks away. So this could be a really nice push to the upside. Maybe it goes to new highs, or maybe it just goes to make a slightly higher high or slightly lower high, and then go into a much more pronounced, not pronounced, what's the word I'm looking for? Much more just long and drawn out kind of a correction here. And this is another thing you see here. This is, again, the triple divergence in the momentum. So momentum is waning finally in here. We're not going up quite as fast as we were back here. And then by the time we make this final high, momentum is completely flat. So it's kind of rounding out there, that last part, riding the top of that channel. And then you get the huge selling, the huge sell-off as it breaks that final little trend line there. All right, so let's fine tune this here on the hourly. I'm just trying to see if we have anything else. I believe we have a kiss goodbye. Well, see, that was one kiss goodbye, and this is an old technical analysis term. I think Edwards and McGee wrote a book, The Technical Analysis of Stock Trends. It's like the first book that you have to read to become a chartered market technician. And this is what you'll see over and over again. When you're changing trend, you'll break out of one channel here and then pull back to it. And that's the kiss goodbye. And then we programmed that into these channels so that it would show you a different colored line indicating that this is a potential kiss goodbye line. And you see that's what we came up and tagged on double divergence, and a little buying climax there into that high on double divergence. And then we rolled down and made a new low slightly. And this is where I actually got short yesterday, right here at this high, which was, I don't have a fast enough chart to show you here. Yeah, well, yeah, that was one of the areas. It overthrew this area, but then it came to the top of a perfect A, B, C little correction. And I was looking for one more fifth wave down. And that was a huge number of ticks there on just that, 1 hour bar. That's obviously the Nasdaq is so incredibly volatile right now. Yeah, it's like 150 ticks, 160 ticks. So for a major low being in, you've seen the other areas that we have. Let's see if we have anything else coming in. I don't really think there's much else that could be coming in there other than the massive channels that you have seen already. Let's look at the ES then, because we clearly have a major area in the Nasdaq that we found support on. And we have our first higher low here, right? So this is very potentially big A, B, 5 waves down for C with an extended fifth wave. So this might very well be a 1, 2. Okay, but when we compare this Nasdaq to the ES is actually looking like a triangle. 1, 2, 3, 4. I don't know about that. That kind of feels like 5. I mean, it's a nice little 5 right there, isn't it? Let me make this an hourly chart. Yeah, ES is quite a bit different looking here. Yeah. All right, you see this? Yeah, I'm just drawing from low to low here. So we're coming back up. We're making it to the top of that channel. But typically when we're in an impulse wave, motive wave, 5 wave move, a trending move, basically, we tend to break out of the channels. Obviously, if you're in a very steep channel, it's pretty difficult to break out of it. But when you're in a slightly, let's say it's not sloping up as strong, if you're in a motive wave, you'll tend to break out of the top of it. So here, we put in that third wave high right at the top of the channel, get a nice correction back down. Looks like just a flat ABC, and then another 5 wave move to the upside. So I'm not really sure what to do with this on the ES, but let's not worry about that too much and just look at this last move here. All right. So if you're in a triangle, the waves tend to be related by 78.6% or 61.8. And sometimes if it's a running triangle, then hang on a second. That doesn't quite work. If it's a running triangle, then the C wave will be typically 100% of wave A. I know that's hard to follow along when you have no idea what I'm talking about, but if this is a triangle, then the waves tend to be related. A triangle is contracting price action, series of lower highs and higher lows. That's a triangle. So it would be A. Let's do this in a different. It would be A, B, C, D, E. And these waves would be related. So C would be related to A typically, 78.6 or 61.8. Here it's 78.6, more or less. Yeah, we go through it, but no bar closes below it. And then D will tend to be 61.8 or 78.6 of B. Yeah, see, I'm using the extended low of that massive selling climax. We'll come back and use this low as well. Yeah, see, it's 61.8. If I use that low, ooh, it's 100% exactly. Huh. All right, so anyway, yeah, 78.6 down, 61.8 back up. Let's see if the E wave is related to the C wave. 61.8, pretty much a couple of ticks away from it. So yeah, I would say this is a triangle, and the low is in, and we're going to be screaming to the upside as of Sunday night. So if there's any takeaway from this, I would say looks like a buy, the ES and the Nasdaq. not telling you what to do, and I'm not recommending any trades. But that is a very typical triangle correction. Let me just erase all of it or hide all of it here. And bring some of this stuff back. Yeah. So let's just do this. It's a long, drawn out fourth wave, and then wave 5. Kind of weird looking, but anyway, that's a sharp A wave down, big ABC back up for wave B, ABC down for C, ABC up for D, ABC down for E, and series of lower highs, higher lows, and we will likely be going up to new highs now, which on the ES is what, 35 ticks away? That's not very high. But that might be where the ES and the Nasdaq start diverging again. So, you know, Nasdaq may, or sorry, the ES may go up and make a new high, while Nasdaq makes a lower high. So, you know, who knows how that's going to play out. But right now it's looking like we got another wave to the upside. Typically a triangle, or always if it's a true triangle, it's the penultimate wave. So it's the wave before the completion of the pattern that it's in. In this case, this would be a fourth wave of, from here, 1, 2, 3, 4. We would be looking for a fifth wave up. You see, so it's the penultimate wave in a 5-wave structure. Or within a correction, it could be the B wave or the X wave. But a triangle is always the wave before the next major high or low. Okay, so just a little bit about triangles there. So that's a pretty, that's a textbook kind of a triangle. So that's looking pretty nice in the ES for new highs. So I'd say that's confirming the Nasdaq breaking up. Whether it's going to go back above this high, I'm not sure, but if it does, man, that's a huge, huge move. It's over 800 ticks. I don't know if I would attempt, well, it depends on what it looks like when it starts, moving up. If it starts kind of rounding out here and we get some divergence on the 20-minute, the 5-minute, and we get a nice volume divergence signal up in here before breaking out of the high, then I would exit it. But if we're screaming to the upside, right around in here, and we just keep pushing, then I would definitely hold it back for the top of the channel, maybe even through. Okay, but definitely above this high, that B wave high. So we're looking at a potential 1, 2. All right, so you'll have to see what it looks like on Sunday night. But, maybe we'll get lucky and it'll pull back Sunday night, and then Monday morning, it'll still be down around here somewhere. If it breaks this low, then that whole scenario is out of the question, right? If it breaks that low. And if it does that, then that would mean that this is a 1, 2 of C. And we would be doing a zigzag. But relative to the ES, that does not look like what's happening. It looks very much like this is a major low and we're going to go to new highs. So any question, you guys? If I've missed some questions, please ask again. I'm about to fall over. I'm so tired. Okay, thanks, John. Thanks, James. I'll be working all weekend, unfortunately. Hopefully I'll wake up feeling a little bit better tomorrow. Carlos is saying he was keeping an eye on the tape, and there were some bids of 408.46 contracts filled at the bid on the ES after hours. That's interesting. Yeah, see, the bid and ask stuff is interesting. It's nice to know that. Of course, it slows Ninja down pretty bad. Not Ninja 8, but Ninja 7. All that bid ask order flow stuff is pretty intensive. As far as I'm concerned, I don't really need any of that. It's interesting information. I've spent I don't know, about a year studying it, but I don't. It's information overload for me. The way that I'm trading, I suppose if I were scalping, just going for little small trades here and there, I would use it. But to find the ends of some major moves, it doesn't really help me. But for finding the ends of little, small retracements during the day, I would say it's useful. But for me, it's just overkill. Too much information. I have enough information as it is. And of course, you want to maximize. How do I say that? You don't want to have anything on your chart that's not actually helping you. If you have just a bunch of oscillators and averages and you have all this crap all over your chart, but you're not really paying attention to it, why even have it? It's just a distraction for most people. So everything that I have on my charts, I've actually proven to be quite useful. And that's why I've limited myself to just these three things, just the market geometry, the volume, relative volume per range, and price action and volume essentially all built into one. And then momentum divergence. I want to see price slowing down. And this just makes that more visual. I mean, I can, technically I can just see it on the chart, but with this, I'm actually notified when it happens on other markets. And when I get triple divergence, that shows up very nicely. Like you see here and here, that magenta triple divergence. So that's why I've kind of limited myself to just these three things. When I start adding other stuff in, it tends to make me second guess my trades. And then I end up not doing anything. I end up not pulling the trigger. So yeah, I went way longer than I normally go. I haven't done this in a few weeks, but I got kind of carried away there when I started going over the rest of the charts that we use. But anyway, whatever. Good practice for next Thursday. Tony is asking, are you adding any more software protection stuff like you did last time? Yes. Oh, yeah. For sure. And we may not be able to get all of the stuff added into the toolbar that we wanted to have done by the 22nd, but we'll have that next update rolled out pretty soon thereafter. The Ninja Manager is being updated right now, so there's really no sense in messing with it because it's not working right now. Let me just show you this briefly. It's really cool. So now we have a Run Now button. Well, what this does, Ninja Manager, the way that it works now, it's much more, I think, the way that it should work. It will delete your underscore workspace file so that it opens Ninja with a clean environment, just a blank untitled #1 workspace. And then it will connect to the data feed that you have here, and then it will connect to this data feed. It'll delete the cache if you want before it opens Ninja. You don't need a timer for that now. It does it automatically. It times it automatically. And then it will open these workspaces one by one and wait for them to load until they're loaded. And then it will open the next one And once it's opened everything, then it will cycle through the workspaces until it knows that all of the charts have completely loaded. And then it will, well, yeah, that's it. Now you can make it to where you can start your computer up automatically on a timer. So your computer, you can go finish the day, turn off your computer. The computer will start itself up. You can do all that inside of the BIOS. We will have some explanation on how to do that. And then when it starts up, it will start Ninja Manager automatically. And then once it gets going, it will lock your computer for you right here. If you check that. And if you check this, it will launch the Ninja Manager with Ninja Trader on Windows Startup. So you can automate the entire process, even delete the cache, open up all the workspaces, cycle through all the workspaces, connect to data properly, and have everything ready to go so that when you wake up, you come to your computer, all you have to do is log in and everything is ready to go. So this will hopefully be ready by next week as well. I mean, it's just got a couple of bugs, so it should be good to go hopefully by the middle of next week. And that's a free download on our site, so that's a pretty incredible tool for free. So everything is designed to save you guys time. I mean, trading is about time, basically. The more time you have to devote to proper analysis, the more potential setups and trades you can take, right? So if you can have everything up and running before you even come to your PC, then you have all the more time to dedicate to marking up your charts, doing the analysis, and actually potentially making money. So how do you learn to be patient? Lose a lot of money and study. Lose a lot of money again, study some more, keep trading. And then after a while, I mean, if you don't develop the patience, then obviously you're not going to be able to stay in the game and keep trading, right? I mean, that's ultimately what trading is all about, is exercising patience and knowing when to react and when to sit on your hands and waiting for the perfect setup and not manufacturing trades and not entering on the whim, of whatever, because you see the market move real fast and then you jump into the market. So if you can avoid just those kinds of mistakes, then you can at least stay in the game long enough to start seeing some progress. But yeah, how do you learn patience? That's a good question. It's probably rhetorical. I mean, you know how it is, but that's the major problem, I think, with most people. Even with me now, sometimes if I'm sitting there all day long and I've marked up all my charts, all my workspaces, and I haven't seen anything set up, it's like by the end of the day, I want to try to get into a trade, so I end up making a mistake. Or, you know how it goes. So especially when you're trading like this, it takes effort to do the analysis, find the areas where you want to do business, and then execute. It takes a lot of effort, but with this style of trading and the effort comes much more reward as well. And after you see this stuff happen over and over again, you see the market move like you're expecting, you see the volume divergence come in, or the volume signals confirming the area, and then you see it move out of that area. You see that enough times and you see it over and over. It becomes kind of validating, I guess. It's rewarding, I think, in a way, to be able to anticipate what the market is going to do and then actually see that occur. Now, you don't have to be right all the time, to still make money. So, you know, oftentimes we do get it wrong, and we do make mistakes, but over time the account is growing, and that's really what counts. So it's my little tidbit on trading psychology to wrap it up. So any other questions? To make both charts work, do I need Bloodhound and Blackbird? Gemini, I think you have both of those, don't you? I thought you had Blackbird or Bloodhound. No, you don't have to have Bloodhound and Blackbird. I'm going to be demoing Blackbird on Thursday, but that's because I have now the ability to do semi-automated trading and trade management now that we have the tools to access these lines. And forgive me guys, I'm just completely congested, but now that we have the means to be able to access the values of these lines when a bar is touching one of these lines on any chart, the volume signals from any chart, the divergence signals from any chart, and do all of that inside of Bloodhound without crashing Ninja. Now that we have that ability, we can move towards automating some of the trade management. I don't, for me personally, I maybe we'll get to the point someday, but I'm not really interested in fully automating my trading. I would like to automate some of the trade management though. I mean, the way this stuff works, you really have to have a good understanding of the way the market moves. You have to have some understanding of the market structure and what the direction is and all these sorts of things that can't necessarily really be programmed, especially the market geometry. It really has to be applied manually, discretionarily. But there are some things that we can automate, and that's what we're going to be going over on Thursday. And that's what I'm looking forward to is, now taking some of that stress off after entering the trade and having much more, I would say, well-defined trade management. So, we'll get into the trade probably manually, at least semi-automated at the most, not fully automated to get in, but then let Blackbird and the tools manage the rest of the trade and exit the trade for you. So that's what we're trying to move towards. All right, have I missed any other questions? I know I've been talking for almost 3 hours, or what? Nah, 2 hours and 15 minutes. So I needed some practice. Was there a specific reason why you were asking, Tony, about adding more protection to the software? I'm just curious why you would ask that. Was there something wrong with it before? Yeah, Vito, it'll be recorded for sure, and then we'll have another part 2 on Saturday. Just making sure I didn't miss any questions. Okay. All right, guys. Well, let me look in HIP chat. Yep. All right, everybody have a great weekend. Yep. Thanks, you guys. Thanks, Raymond, Larry, Carlos, John, Vito, Gamini. All right, wonderful. All right, take care. Talk to you guys next week. Bye, everyone.